All right, welcome to the Orange Wheel podcast, the podcast where we support business leaders in navigating the monetary transition. Joined today by Christoffer De Geer. Hopefully I pronounced that properly. Christoffer De Geer is the CEO, founder, De Geer.
Somewhat. No one knows. I mean, it's Dutch, but I'm in Sweden, so De Geer, but De Geer, yeah, no one knows.
Christoffer then. He is the CEO and founder of Bitcoin Treasury Capital AB, based in Sweden, and has a history before that in Bitcoin at the intersection of mining and energy. Really excited to talk to you today. We had a short conversation over the phone a few months back where we got to know each other a little bit. And since then, BTC AB has really developed quite rapidly. It's super cool to kind of follow, where it's going and so forth. So excited today to kind of hear more about the history and progress of BTC AB, and get into some of the details of kind of the mechanics behind what it takes to set up one of these companies independently. So with that, Christoffer, how are you doing today?
Really good, really good. It's very nice to finally have found you, found your calling in Bitcoin. It's just nice to find a fellow Bitcoin religious person to talk to, because generally people I have no one to talk to. Everybody's very tired of Bitcoin, and since I can only talk about Bitcoin, people are generally very tired of me. So it's nice to have someone to talk to.
Totally. Yeah, the feeling's exactly mutual. I think we were discussing this before starting recording, but it's people in my personal life, my social circles, they're just like, shut up about the Bitcoin. And
Yeah,
it's
exactly.
great to have an outlet. Yeah.
But it's nice like how you don't have to convince them anymore, because now they're like, before it was they looked at you with scorn or with, or pity even, like, this idiot has bought some air money, like, you idiot, it is going to go to zero. And then 10 years later, they're like, I can't even look him in the eyes anymore because I know it's going to zero, but for some reason it's gone up 1,000x, and he's not right. It's just that he's lucky, but at the same time, I don't know, because how did you hold something that's just air for with that conviction? And it's it's confusion now, and I love it. It's just an amazing, the classic Bitcoin saying that everybody buys Bitcoin at the price they deserve is really true. And our number go up technology just ruins the fiat mindset, and it's just a lovely thing to have. I don't know what I would do if we didn't have Bitcoin. It's just it's the perfect thing.
It really is. And I think, the positive implications it's going to have on human society, I think, are just going to be so profound that I think it'll be interesting when people look back on the pre-Bitcoin era being like, we were savages,
Yeah, exactly.
It's like when we look back on serfs being tied to the nobility's land and stuff, right? I think it's almost going to be that level of savagery that we're looked back on. So yeah, I'm also I have friends that are like that as well, that are kind of like, well, the number's going up, but it's a bubble. It's just a big Ponzi scheme, but it becomes less and less. I think as more and more institutional investors with reputation get behind it, I feel like that argument gets more and more fragile. But I'm just waiting for, when there's a 20% pullback next year or something, they're going to be
they're like
pointing the finger at me.
It's crashing. Oh, how can you even, like, it's crashing from $200,000 to $160,000. Like, how do you feel? You must feel awful.
Exactly. Amazing.
But it's true as well that they it is a bubble in a sense always, because in the beginning, if all people stopped caring about Bitcoin, it will go to zero. So technically they're correct. But now if all people and companies stopped caring about Bitcoin, then it's going to zero. So they're still technically correct. Then people, companies, and institutions, if everybody stops caring, which can happen, then I'm correct. It's going to go to, if all nations and the entire world, you're like, just keep your fiat, just save get 3% per year with 11% inflation and be super happy.
Exactly. Or the market, there's 7% from the market and you're still falling behind in real terms. So totally get it. Okay, so many avenues we could explore, but let's maybe take a few steps back and kind of hear about, a little bit about what you're doing before you decided to found BTC AB. I know that could be a couple hours on itself, but maybe just a few notes on that, and then kind of maybe lead up to understanding, what was the point in time when you decided, I'm going to found this new company that is exclusively a Bitcoin Treasury company based in Sweden?
Sure. So first of all, I'm unfortunately an economist, It's the most useless degree you can have. It's a pseudo, but I didn't know that when I started studying, of course. I thought it was an actual science or something useful, but it's not. It's just complete garbage. But what it is, it's a really fast way to learn the value of Bitcoin, because you get indoctrinated with, at least during my education, they said always like, interest rates can never go below zero, because if they do, people will take out their money and stuff it in the mattress. And then I studied this I get my master's degree, and then after the day after I get finished, they're like, put the interest rate below zero, and Sweden was the first to do it. And then no one takes out their money from the mattress, and we just have negative interest rates, and everything I've studied is useless. You're like, oh, that's fantastic. Okay, so economics is not for me. So what is? I like people, and I like talking, and I like just learning. So I went to China and lived there for a while, worked at a Chinese firm and studied Chinese. So then there, when I was going to fly back to Sweden, I had a lot of cash, because you didn't have a bank account back then in China. As a Westerner, you only had cash. And that was the first time I got introduced to the draconian fiat system, where I had actual, I had the invoices or receipts and everything for my cash, and I just wanted to take that back to Sweden, but I wasn't allowed. The bank didn't want to help. You can't fly with money. You can buy a watch and then lose half your value. It's a very strange phenomenon that you can't move your own money. It's not your own money, but you can't even move that money you have. There's no solution. And then I just tried to find the solution. I was going to fly back like tomorrow, and then I found Bitcoin. So I met someone at a cafe, and he showed me Bitcoin. It was a really strange thing, but it worked.
Which year was this? What around?
2013. So then I bought Bitcoin. Unfortunately, I sold it all, because this was before I was Bitcoin religious, but it was a good way for me to see the value of it, because then I can buy Bitcoin and immediately sell it, and then you transfer the value to Sweden.
And were you using, just out of curiosity, was it like exchanges, or were you doing it person to person at that time?
Person to person.
Okay, so when you go back to Sweden, you had to find another individual who's willing to.
I know that in Sweden we have had exchanges, but since I didn't have a bank account in China, it's very hard to use an exchange. But when you have Bitcoin, then you can use the exchange, because yeah. But so then I learned, like, okay, this is actually interesting. So I started studying up on it and got quite early deeply Bitcoin religious, because there's only 21 million of these things. It's like the internet, but if internet had shares. So I don't have to buy Google or Facebook or bet on pets.com. I can just buy Bitcoin, and that's it. And then you just buy Bitcoin and do nothing, and it's just insane. So then I started studying up on this, and I got deeper Bitcoin religious. And that's also why I'm very good at spotting shitcoins and bullshit, because do they solve my problem better? Can I move value better than Bitcoin? No, not one single shitcoin have solved that problem better than Bitcoin does. And they never will, because we don't need another internet. We have the internet. We don't need another value transfer system. We have Bitcoin. We're done. So then skip all the shitcoins. And that's what you do. You just focus on Bitcoin, and that's what I've been doing for a long time now. So what I did in China was I started working for a firm that we'd made like security, like a secure storage and stuff in China. And then when I moved back to Sweden, I was part of the first listed Bitcoin instrument, which was Expeditive Providers Bitcoin Tracker 1. It's today named CoinShares. We listed that on Nasdaq. And then after that, I was part of a Bitcoin brokerage here in Sweden, and I went and bought some hydro plants and started to mine Bitcoin. That was more of like a art project from the beginning, almost like it's like a childhood dream almost. Like you can't really mine, because it's very dangerous with the energy prices. If you have a high energy price for a few years, then your entire fleet of Bitcoin miners is useless, and then they've depleted because they're not competitive anymore. But if you have a hydro plant, then you can just, if there's a high energy price, you sell the electricity, and if it's low energy price, then you mine. So it's a really nice balance, and Bitcoin mining really fits into energy production. This is a completely different world. The energy markets are very strange and dysfunctional, so therefore Bitcoin really fits perfectly into that mix, because if you need to stabilize the grid, which you do every millisecond, it needs to be at 50 hertz. And if you're mining, then you can decrease your energy consumption. Or if you have miners that are offline, you can put them on and therefore increase the consumption. So therefore you can balance the grid just like a battery does, but with only Bitcoin miners.
Yeah.
So I found
And it's nice because you make a revenue almost immediately too from doing that, right? As opposed to storing it for hypothetical use in the future. You're actually
yeah,
getting the
yeah,
revenue share almost immediately. Are these hydro plants, I guess, are kind of small scale ones
yeah.
and
It's
located in Sweden as well?
yeah, located in Sweden. So and Sweden has a lot of small scale hydro plants, which is nice. In theory, I would like to buy more hydro plants, but in practice, no one sells hydro plants. It's really hard to buy because it's a nice asset to own. It's just also one of the most beautiful business models you can have, because you have your own river and then you have your own turbine and generator. It goes into your own miners, and that becomes Bitcoin that you control. And they're clean Bitcoin. It's new,
Yeah.
pristine Bitcoins. So there's no customers, there's no nothing. It's
Counterparties.
just water becoming Bitcoin, and it's a very beautiful business model in that sense.
Hmm.
So I did that for quite a while. I didn't completely check out from society, but kind of. I stopped using X or Twitter, and I stopped reading the news. I just, I focused on my craft and my life, which was just Bitcoin. But then my brother started talking about MicroStrategy. It sounded like the dumbest idea I've ever heard. Like, I'm a Bitcoin maximalist. You don't put your Bitcoins in someone else's hands, and he's going to do an FTX. It's just going to explode. You can't get 400% yield on your Bitcoins. This is a scam. I'm not going to even touch this. And then 5 years later or something, MicroStrategy had died. So then and it outperformed Bitcoin quite a lot. So since I'm a reasonable person, somewhat, then I said, like, fine, I'm going to evaluate MicroStrategy and see, is there something behind this? Because I was clearly wrong, or something strange is going on. And when I finally started studying up on MicroStrategy, I realized that there is actual value in what he is doing. And it's been written about for a long time, and it's called a speculative attack. And we Bitcoiners love that concept. And what it is that, for example, you borrow fiat that goes down in value, you buy Bitcoin that goes up in value, and you create value by creating this spread. And that speculative attack is nothing new. It's not what only Bitcoiners have done. This is a historical phenomenon that is actually executable. And what treasury companies are doing, and what MicroStrategy is the best at doing at the moment, is this speculative attack. So when I realized that, I fell head over heels in love with the concept of building a company that does a speculative attack on the fiat system to accumulate more Bitcoin. And from there on, we said, like, this is all we're gonna do. Let's focus on this. Let's build it correctly from the beginning. Let's not try to be fast and buy some, a shitty business that is, you just suddenly become a treasury company and save your share price, even though you have a losing business model. Let's build this from the beginning, and let's set up a new company. Let's put it on the stock exchange without any previous track record. Let's not buy a hotel in Tokyo to try to add some, just pure Bitcoin play. Treasury
And this was
company
around,
that's,
like, time-wise, this was kind of like late 2024 or so, time-wise, that you kind of were
and something like that. And it took perhaps 6 months to get listed and approved and everything. So then we started trading now 3 weeks ago, which was really nice. So we listed at 210 kroner per share, and then currently it's around 300 and something. So it went really well, which was nice.
And how did, so I guess also being a new entity, you can't really list on the main NASDAQ exchange. I guess it's NASDAQ Stockholm. So there's kind of a more junior entry exchange there. Is that First North? Is that what it's called?
Yeah, exactly. First North is a more junior. We used a different one called Spotlight Stock Market. And we have, at the moment, it's a really good, they are very crypto friendly, which is nice. A lot of ETP providers use Spotlight Stock Market as well here in Sweden, but they don't have access to the entire world. For example, American investors have a hard time investing in our share, so therefore we're listing at OTC markets as well. which provides us access to the American markets. And we're listing in Frankfurt to give more access to the European market and so forth. So my goal, at least with the company there, was just let's build a foundation so that I can do a speculative attack on the fiat system now for the next 100 years. We will just try to generate more Bitcoin per share forever, and that's it. There's no quick something. There's nothing. We just want to build a perfect tool to generate more Bitcoin per share via doing a speculative attack on the fiat system.
Yeah. So long as that speculative attack, I think it's interesting because it's funny because I think the people are participating willingly in it without knowing it's attack on fiat. They're happy to kind of get, and maybe this doesn't apply to BTC AB, but like people who are buying the preferred stock of MicroStrategy they're happy because they're getting their 8, 9, 10% fiat yield. And in doing so are enabling the purchase of more Bitcoin and the sucking of capital into the Bitcoin networks.
Yeah.
From their perspective, it's not an attack. They're just kind of willingly participating to get a yield that exceeds what they would otherwise get on a risk-adjusted basis from other competing preferred stocks or debt issuances, right? So
yeah, it's a boiling lovely, frog. It's a boiling frog speculative attack on fiat people. Yeah, exactly. They don't know what they're getting, but they're getting attacked.
So I think it's really cool. So I think, how do you sort of see the landscape evolving? Because I think what a lot of people are saying right now is, okay, there'll be like winner takes most in each capital market globally. So there'll probably be a handful that really become major players in each country, roughly speaking. Do you kind of abide by that perspective? And if so, do you think that BTC AB is positioned to basically become the dominant Swedish player performing this function?
Not sure it will. I mean, in a sense, I don't think we can compete really in that sense. We're all buying Bitcoin. We don't have any customers, so we're just helping each other push up Bitcoin and decrease the value of fiat. So I don't think there's going to be so much competition as people think. What I think is going to happen instead is that you will see so many shitty businesses, like a shitty Bitcoin business. It's just an awful company. It's been operating, either is mismanaged or it doesn't. Its business model is not good. It's not. It's generating a loss, not a profit.
Yeah.
And then they become a Bitcoin treasury company. And I don't think that's the right approach, because I think investors generally would like to invest in software as a service companies and hotels and whatever it is, and the treasury companies. I don't think you want to invest in companies that do both. Right. So I think what we will see in the long run is just, if the mismanaged companies will not be able to succeed, and then the well-functioning companies will. But at the same time, if you have a really good company that is generating a lot of profit and you add Bitcoin to your treasury, that is going to add value to that company. Is it a treasury company? I don't know. It's more like a company that has Bitcoin on the balance sheet. But that company for sure adds value and does a speculative attack and so forth. So I think we will just see a lot of, like, every company will become a Bitcoin treasury company in some senses. The good ones will fail, and the good ones will pass, and the bad ones will fail. And you won't even call them Bitcoin treasury companies in the future, because it's just companies that have Bitcoin on the balance sheet, just like companies are not fiat treasury companies just because they have fiat. So it's just, I think we will be uniquely positioned since we are a pure play, but there will be so many companies having Bitcoin on the balance sheet for sure.
Yeah. Fascinating. I see things similarly, maybe a little bit different. And again, I think it might be too early to tell, but the model I've been kind of working with is sort of saying that there is this function, this service, which is basically acting as a vehicle to transfer capital from the fiat system into the Bitcoin network. And that's kind of what we're kind of labeling as Bitcoin treasury companies today. And then there's going to be, I think, companies that can generate a Bitcoin yield by means of their operating business if they are cash flow positive. So if they're generating cash, none of their organic capital allocation options are really beating Bitcoin, then acquiring Bitcoin can in some instances generate a yield greater than had the investors just bought a Bitcoin ETF or bought Bitcoin specifically.
I think that's true, and that's why I wouldn't classify them as Bitcoin treasury companies. They are well-run operating businesses that buy Bitcoin and have it on the balance sheet. What I will try to do with BTC AB is a speculative attack. We're trying to get fiat in and then generate more Bitcoin, and that's the business model. It's pure Bitcoin treasury operations. It's really what it is, and we have no separate business. We have no hotel. We have no software.
Hmm.
And I think that's why we are a treasury company by choice, and we also have Bitcoin on the balance sheet. But that's that's what treasury is. It's to do this speculative attack, and I think that separates us from other companies. But I mean, it's great that every single company just starts buying Bitcoin. We can't compete. Just everyone just buy Bitcoin. It's
Yeah, for
just
sure.
what you should do.
I think there's very few businesses that are exceeding a rate of return of what Bitcoin's providing right now. And so almost every company should be doing this. And just basically that's
Yeah.
a form by which we're recapitalizing to a Bitcoin standard effectively. I think it's interesting too, because I've been like thinking that, we've been suffering from decades and decades of a manipulated monetary system where there's been this incentive to reduce the cost of capital lower and lower and lower and lower. But as a result, there's been this kind of like misallocation of capital into businesses that just effectively become zombie companies. And we've had this kind of like decades long buildup, and now Bitcoin's basically acting as the antidote to that. And it's basically incentivizing the capital now to come to a much higher cost of capital, taking money out of these unproductive zombie companies and so forth, which I think is going to have profound implications. It's going to be great, but there's a lot of companies that probably just shouldn't exist that do
No.
exist.
Yeah.
and
Exactly. Yeah.
and they're going to kind of be wiped out. But at least the capital that they do have presently that they're stewarding could be preserved if they're smart enough to then reallocate it to Bitcoin for their equity holders.
Yeah, for sure. But then, as a different answer to your question regarding how different treasury companies compete and if there will be a winner takes all scenario and so forth, I think that to some extent we won't see premiums being as high as they have been forever. I mean, it's going to be a premium compression. I would. So I think what will happen is that we will have some type of equilibrium where you have, let's say, as an example, you manage to generate exactly, let's say, for simplicity's sake, 10% Bitcoin yield per year, and you've done that for 20 years. Then the market will add that to the expectation of the share price, and you won't be able to generate 400% Bitcoin yield for 200 years, because if you would be able to, you would generate more than the actual existence of would have
Mm,
more bitcoins than Bitcoin than you can have. So
mm,
therefore there will be a natural progression where the premium will compress to some type of logical level. And let's say that's, as an example, in that case, if it's 10% per year you generate yield and the market adds, let's say, 5 times earnings, if you could call it that, to your share price, then you would have your net asset value plus 50%. So let's say
mm, mm,
MNAV of 1.5, for example. And therefore, I think we will see companies that generate yield will have that type of MNAV that is a function of how much yield they can generate. So therefore, the story and the hype and all of this will disappear. So therefore, I don't think one company will be the winner take all, because all companies can generate yield, especially the smaller you are, the easier it is to some extent
mm,
to generate
mm,
yield. However, some companies like MicroStrategy or Strategy have a really nice position where, since they've been listed for such a long time, they're available everywhere and they have so much experience operating in the listed financial markets that they can
mm,
generate new tools, be very creative. Like, they
mm,
are really good stewards of this business model, and
mm,
therefore
mm,
they will likely have a higher premium because they have some type of, first mover advantage or
mm,
longer track record. It will be very similar to how traditional markets work. But I
mm,
don't think we will see one company having, MNAV of 10 and
mm,
another having an MNAV of 1.1,
mm.
just if they're in the same jurisdiction and do the same work. I don't think that's how it's going to work. But if you're listed in Japan and you have no competition and there's a different fiat system there than in the US, then that they will have very different MNAVs, for example.
Yeah, I see that. There's definitely like jurisdiction-specific regulatory implications and taxation and so forth that can definitely create different imbalances, I suppose, that could result in different MNAV valuations. That's pretty cool. And it's I think irrespective, it's going to be very fascinating to see how this all plays out. Another question, I guess, in the future, at some point in time, this regulatory arbitrage will diminish to an extent where maybe it is not the primary driver, or maybe I don't know if you necessarily agree with this or not, but I guess ultimately we agree that it will be like less and less. The window is very large right now, the regulatory arbitrage, the speculative attack. At some point, the attack will be kind of over, I guess, right? Like we'll be on a Bitcoin standard. The companies will be capitalized on Bitcoin. The companies that have then accumulated Bitcoin that were exclusively Bitcoin Treasury plays, not mixed in with operating businesses, do you think they will evolve new service offerings simply by result of having the Bitcoin on the balance sheet? Will they provide some sort of like financial services, or how do you sort of see that playing out?
I mean, I guess it depends, because let's say we can generate a yield because what we're doing at the moment, to simplify things, let's say we have exactly 100 Bitcoins and they're in cold storage. So you don't lend them out, you don't do options trading with them, you do nothing. It's just safe and sound. Then you have the trade, the share, and that's trading on the listed stock market, which is a database. It's not a blockchain. Thank God, it's not going to get hacked. You're not getting rug pulled or sandwich attacked. It's just that rhyme. It's just a thing that trades and it's safe. You're operating today by either, let's say you have a premium, then you can do a share issuance. Therefore, you generate yield for previous shareholders and so forth. More Bitcoin per share. Or you do this speculative attack. And that means taking in fiat and assuming that fiat will go down compared to Bitcoin over time. And then that spread is what gives you value and more Bitcoin per share. You have those two types of tools at the moment. And that's the tools are formulated as a convertible Bitcoin loan, Bitcoin convertible, or share issuance, like super different. You can do different things, but that's kind of the gist of it, the base logic of it. But let's say we get to a Bitcoin standard and there's no more fiat to be had in that sense. Let's say Bitcoin stabilizes, for example, or you measure everything in Bitcoin, and therefore you won't be able to borrow fiat from a bank to buy Bitcoin because they also expect Bitcoin to go up at a certain rate and will give you the same interest rate as what they expect Bitcoin to increase at compared to fiat or something like that. So let's say you don't have these tools anymore, but you sit on 100,000 Bitcoins. Yeah, then I think you do need to invent something else. And what that is, it's quite a long while. I mean, to assume the bank understands Bitcoin and cares about Bitcoin is a good 30 years away or something. I mean, when you talk to bank, well, all your friends, they still look at you confused. So we're very far away. But at that point, if there's no more tools to be had and we just sit on Bitcoin, then I think something new have to be developed. Yes. What that is, I don't know, because it's not as easy as just lending out Bitcoin. Maybe, but it's a pristine asset. It really has to be, you really need to know what you're doing then and so forth. So it's not the simplest thing to do. So I don't know what those tools will look like in the future, but I would assume that if we sit on a lot of Bitcoins and you have no way to generate more of them, then you need to put them to work. But that's a secondary need at the moment because the speculative attack, the fiat, the decrease in value in fiat is so much more rewarding to focus on than to actually put your Bitcoins to use, I would say.
Definitely.
If you want to, you can today lend them out and get 2-3% per year on your Bitcoins. So that's still, in theory, something you can do today. The risk factor of that is relatively high compared to doing nothing, but still, that's an option, I guess.
Yeah, great to hear. Yeah, I don't know exactly how this will unfold either. I'm interested in discussing it, but with you, it's something that's not necessarily a priority for most companies right now because, as you said, the game in town right now to play is the fiat Bitcoin arbitrage. It's such a huge play, and we need lots of vehicles to kind of make that happen. So I understand that should be the focus, but it's just curious to kind of think how it might evolve. My thinking is also just I don't know if it'll be financial services like lending per se that will be the main business, but in any case, having such amount of capital, I think only creates future optionality, whether it be becoming a bit of a hedge fund, becoming like a Berkshire Hathaway type vehicle, becoming a private equity company. I think all these same types of constructs will still exist in a Bitcoin standard, and having Bitcoin available as capital will create such optionality.
Yeah, but what I don't like about, like, as soon as a company says we're a Bitcoin Treasury company and we do this other thing, what I don't like is that like how can you do this other thing? Like it's it's not relevant. Nothing is relevant compared to Bitcoin. So why are you wasting your time on something else? It's just put all your effort into Bitcoin. It's like the most rewarding God you can have. It's just I don't understand it. So I don't know. I don't like the non-religious aspect of a buy focused Bitcoin
Mm.
treasury company. Just
Mm.
focus on Bitcoin. That's what you should do. So I don't know. I don't like the logic of becoming a hedge fund, because what you should do is focus on getting your Bitcoins, not putting the Bitcoins to work in investing in some potential. Then you have to evaluate humans, evaluate the business model, evaluate.
Mm.
That's complex. I mean, you're not smarter than the market generally. So just buy Bitcoin. Bitcoin is the market, and it's the future market. It's just what you should buy. So in the future, maybe, but it's quite far away, I would say. Just keep your Bitcoins in cold storage. And in our case, trade, because that's what you're supposed to do, and that's where the value comes, I think, for a passive private investor as well. Like, I would recommend no one to buy treasury companies unless you have actual Bitcoins in cold storage and you know what you're doing. Don't just buy some share and hope they know what they're doing, because
Mm.
it's more complex than that, and Bitcoin is way too important than that. If you have Bitcoins in cold storage, and hopefully you've lost some, so you understand the pain of that and the value
Mm.
of Bitcoin, and the
Mm.
the thought that pops up that, oh, I remember losing Bitcoin back then, that would have been this much today. All of these things are really important, and when you have that, you have Bitcoins in cold storage and you know what you're doing, and it's your most precious asset. Fine, evaluate Bitcoin treasury companies, because we have a unique tool, which is this share that you don't as a private individual. We can trade the share, so we can keep our Bitcoins in cold storage and trade the share. You cannot. You can only keep them in cold storage. So we can generate value, more Bitcoins per share, but at the same time, you are giving away your Bitcoins to someone else, a third party. You have third party risk. It's you don't put all your eggs in treasuries baskets. It's not the right way to do things. So I think just people are a bit too, or a bit not too Bitcoin religious for my taste at the moment. It's
Mm.
just a bit too much of a hype train, and I don't want that. I want people to have real Bitcoins and then understand the value of a treasury company,
Mm.
and invest in it with a really long-term mindset that they want more Bitcoin per share.
Yeah. Totally agree with you on that. I mean, I think that message of saying don't invest in Bitcoin proxies or Bitcoin yield type vehicles or Bitcoin in different wrappers until you've at least gotten, people say different numbers. Some people say 10 Bitcoin in cold storage, whatever it might be for different people, depending on their age. I think the sad reality is that I think there's a lot of people who are going to be the next wave of those who adopt Bitcoin who will find it much easier, simpler to try to shortcut and try to go straight to the treasury companies. And I think a lot of the
Yeah.
people get burned, unfortunately. But I think that's the nature of each of these waves of adoption. Is, the last one was FTX and Celsius, and all the centralized exchanges. This next one might be these types of vehicles.
But it must be. I mean, it's the Bitcoin gods demand that the treasury companies is now, since we are the new shitcoin. That is what treasury companies are. It's the new shitcoin. But we call it shitty Bitcoin business instead. That is what has to explode. The gods demands it, and it's going to be brutal and beautiful, and it's just going to. It is what it is, and that's part of the game. And then we go down 80% again, because we always do, and then someone
Yeah.
gets liquidated, and then the most precious Bitcoiner get sacrificed at the bottom, and then we can start a new bull run. It's just the cycle will repeat. It has always done this. It's always going to do this. It's really beautiful.
And I
I
think
love
it's based
Bitcoin
on
for that.
human nature too, right? And I think it's that dichotomy, right? This adoption also happens through pain and overexuberance and all the human emotions that go into each of these waves, I think.
Yeah, and we're awesome at that. We're really good at going bananas and just, I want to take 100x leverage because I'm sure the market is gonna, like, who does that? Only humans. We're insane,
Yeah,
and it's just a
for
really
sure.
beautiful part of humanity that can do that. I think it's a good, and it's good. I mean, the more we do crazy stuff like this, that's how we create new medicines and create new tools and create new everything. We
Yeah.
have to do this. So it's a good part of the bull run and bear market. Bull run and bear market is really healthy for the economy, I think, in the long run, but it's super painful for people who get liquidated and the retail that just jumped in, and you put all your pension funds in some treasury company, and then it explodes and it's all gone, and it's not fair. But the world isn't fair, so just do your research and put your primary eggs in Bitcoin and then some eggs in a Bitcoin treasury company if you really think that's a good idea. But do your own research and don't jump on the hype train.
Yeah, totally agree with that. I think those are strong, important words, and hopefully some people get it sinks through some people's skulls. Then, if we kind of look at BTCAB specifically here again, kind of curious, which financial instruments do you expect to be using? You mentioned the equity, of course, as a key one, and then that other tool set of preferred stock, convertible debt, all these other things. I mean, what are your perspective on those other financial instruments? Do you intend to use them? If so, when and how?
Yeah, sure. So logically, let's go through the potential tools that we can have. What I'm not saying is that we have already implemented all of this and we're going to use all of this, or that we will use them in this exact fashion. But let's take as an example what we can use. First of all, there's a tool called the at the market. It's not ATM. It's not allowed to be done in Sweden, but we have set up a similar functioning tool. So what we can do at the moment is that if we have a premium that we would like to capitalize on, we can issue shares, and those shares are then, by being issued when there is a premium, we have generated more Bitcoin per share. But we can only do that if there is a premium to our net asset value. That can be done in, let's say, bull market, or if there's a premium. But there won't always be a bull market or a premium, assuming. So there's other tools that has to be used. So for example, there's the Bitcoin convertible. That is a Bitcoin loan. So you let's say you receive 10 Bitcoins or something, and you hold them for 5 years. And if the price strikes at the share price goes to a certain level, but it's not below net asset value, because Bitcoin can increase as well as the share price. Then it converts to shares. So the person who lent in Bitcoins, he gets more Bitcoin because he gets converted to shares, but the value is higher than his actual Bitcoin amount. Whereas we would generate more Bitcoin per share because we pay for those Bitcoin in shares while having a premium as well. So you have the Bitcoin convertible as well. Here you have very low risk, because in our case, we get Bitcoin. In 5 years, we have to pay back Bitcoin if nothing happens and it didn't convert. But it was just Bitcoin on the balance sheet, in and out, in and out. So nothing happened really. You can take that. This is not the speculative attack part. This is just using Bitcoin as tools to generate either yield or premium or something. But then you have the more interesting tools, but that has to be used with more caution, because these are now speculative attack tools, and they have higher potential to generate yield, but they do have liquidation risk, for example, in theory. So let's take the fiat convertible as an example. Let's say we borrow fiat, and if the share price reaches a certain level and it's accretive to the shareholder, so there's a premium, it's not below net asset value, then it converts, and we would pay for the fiat with shares. Therefore, we would get more money into the company, you buy Bitcoin, and you've generated a positive Bitcoin yield. However, depending on how you structure these fiat convertibles, it can be very dangerous. The least dangerous version is saying something like, can I borrow, let's say $10 million from you, and I pay you back in 100 years from now. then the market would assume like this is very likely to happen. It's not even a loan. It's going to be seen as almost like a purchase of shares or something. But it's going to happen at some point. Bitcoin will reach, the share price will reach a certain point where that converts. And during the next 100 years, the dollar is going to decrease a lot in value anyway. So the loan is not very dangerous. That is unlikely
and that's with a 0% coupon as well.
Yeah, exactly. Yeah. That's the optimal structure is 0% coupon. It's like you buying the shares, but not really. No one is going to give that loan, of course, but that's the extreme version where you could do fiat convertible that is super safe. The other spectrum of that is the very unsafe one. Let's say I borrow for 6 months and I borrow and I buy Bitcoin. That if Bitcoin goes down a lot during that period, I still have the fiat to pay. And that means that I have Bitcoin. It decreased 80% in value during those 6 months. Now I have to pay back fiat. That means I have to sell Bitcoin, and we've generated negative Bitcoin yield. So what I think a good steward of this type of company does is to balance the risk here to generate yield. So we would love to do fiat convertibles, and we will do fiat convertibles, and we will do Bitcoin convertibles and all the potential structures that we can, but not at the risk of ruin. I think that's the wrong approach. And we won't get to 100-year convertible, of course, at 0% coupon. We won't accept the 6 months one. So what we are aiming for is, let's say, a 5-year one or something, where you could assume that the Bitcoin will take care of, the market will take care of the risk there. It's not zero, because there are periods where you're plus minus zero investing in Bitcoin over 5 years. There's, I think, at one point,
very
if
short,
you did that.
Very short intervals, but yes, they do exist.
Yeah, so it's in theory you shouldn't do everything at once. You should do intersections of smaller convertibles to decrease the risk, because then you have the average. There's a lot of tools to mitigate that risk of getting liquidated when the loan actually is called back and you have not converted it to shares. But that is how the fiat convertible, I think, should be used. What we will see, and I think the fiat convertible might be the thing that kicks off the next bear market, because if I wanted to generate a crazy amount of yield, I just go super short-term convertibles, and I go 100x leverage. And I mean, imagine the yield. Oh my God, the yield. And then it explodes. So that should happen. That's human nature. I think we will have the lower risk convertibles. We will have the super high risk convertibles, everything in between, and people will accept their own level of security, and someone will accept something that's too risky and it will explode. So fiat convertible is, I think, a good way to kick off the next bear market. But there's also more tools. Or do you want to jump in first?
Well, I was just going to mention that I think on that point about the bear market, I mean, again, I do tend to agree with you. I think if there's going to be something that sets off the next market, this is most likely it. It's Bitcoin Treasury accumulation companies that take on irresponsible forms of leverage. That being said, I do wonder if the market, because it's the equities trading, if the market is a good predictor of risk, which maybe it isn't, but if we assume it is to a certain degree, maybe that would cause some degree of stability, because maybe the people who are looking at the stock interpret the risk as being too great, and therefore the stock price actually they hit a maximum there in terms of how much risk they're taking on for the gain in the Bitcoin yield.
That would assume we are objective during our human exuberance phases, and I don't think that the history agrees with you there. In that case, Luna giving 20% interest on a fiat,
good point,
where banks give 2, it's like, don't put your money there. People are like, I'm going to put everything there. 20% is fantastic.
Yeah,
so I don't think so.
Yeah, I guess the only difference being that when you put it on the trading on the market, if there's also an opportunity to short, then will that kind of help to balance it out? And maybe not. And I think a lot of these stocks can't be shorted anyhow. So I think you're probably right.
Exactly. I think it would be very healthy if we could short more things. That I think is really, really, it's a good tool for people with information to disseminate that information into the market. But if you can't short, then you can't share that knowledge, and that's not really healthy. So I agree that I think everything should be able to be shorted, especially things like our stock. Like we are very small compared to MicroStrategy. There's much less information on how we are operating because we've been listed for 3 weeks. If someone knew something, they should be able to short us. Especially small companies should be able to be shorted because that way the market gets all the information it needs immediately. So I think that's very, very important. So I agree with you there.
But let's go back to the other instruments, I guess, because you were going to mention a few other ones. I guess preferred stock would probably fall kind of in between on that spectrum.
Yeah,
or
exactly. It's a complicated instrument to execute the preferred stock from a legal perspective because it takes a bit more time than a convertible, for example. However, it's a really beautiful balance because I think the preferred stock is the most suitable tool to perform the speculative attack because it gives the shareholder the most security. If you do as MicroStrategy does with Stretch or with Strike or Strife or Stride, they provide the shareholder with a certain, often fixed, not always, but relatively fixed fiat value in. And that, since some people still measure in fiat, which is really confusing, but they do.
not just some, but like 99% of the people out there still do.
Yeah, it's super
crazy.
strange.
Yeah.
They think that's a good thing. Like they want their 9% per year, and they're very happy with that. You would assume then that you wouldn't be able to, like, for example, they still have Bitcoin as a collateral, and therefore it sounds stupid to say, well, if you know Bitcoin is going up by 30% per year, but you only get 9, why the hell wouldn't you buy Bitcoin? And the reason is they don't have a mandate to buy Bitcoin, first of all, but also you get 9% every year. Bitcoin goes like this. And
Yes.
you can't stomach that. Your shareholders can't stomach that. And you're just some middle management. You don't want to get fired.
Yeah.
It's better to buy this 9% per year thing because it's better than the 4% you could get before.
Yeah.
And what you do is you bet that Bitcoin is not going to drop so low that that Michael Saylor can't pay the cost or the interest for the preferreds. And 2, if that happens, you are still almost at the top of getting your money back because you have a really high valued share. Like it's a preferred share. It's not something that it's at the bottom of who's getting paid if the company is getting liquidated.
Yes.
So I think the preferreds are really important to start your speculative attack and to do that in a nice way.
They can suspend the coupons without having a dead event or a illiquidity event or something. They would accumulate, but they could, of course, suspend, which gives a lot more flexibility in case of low price volatility.
At the same time, it's almost like a pactum meum dictum type of thing. He would then not keep his word, and I think that would have a detrimental effect on his future ability to generate these tools. So I think he will do everything in his power to actually pay the price for them. I mean, that's super important for him.
And I guess that they still also they can always just sell a little bit of the Bitcoin stack too in short periods of time to fund the coupons as well, right? I think if there's short periods where I think there will invariably be periods where a little bit of Bitcoin might need to be sold under certain circumstances.
That assumes he cannot raise more funds. Because if he can always raise more funds, which is very likely if you're that big, then he can always pay the coupon with that. So it might also, or he can borrow against assets in theory. He doesn't want to do that, but in theory,
there's
he can
a lot
borrow
of other levers before you get to having to sell Bitcoin. That's totally true.
Yeah, exactly.
Yeah.
For him, I think that's important. He doesn't want to sell Bitcoin. But for us, what I really admire with the strategy is that they are, as everybody's talking about at the moment, they're really building a yield curve. So let's say you want a long-term something, they have a tool for that. Let's say you want your monthly payment because that's important to you for some reason, then you have that too. And they're building these creative financial products that are really made for fiat people to be able to get into Bitcoin without actually, or benefiting from Bitcoin without actually buying Bitcoin. And it sounds confusing to a Bitcoiner, but a lot of funds have certain mandates. They can only buy this or only that or only this type of instrument. They can't buy shares. Yeah. Now they can get Bitcoin or exposure to it, kind of. So I think that's why what my job is that I have to do an analysis of the market that I'm targeting. And in the beginning, it will be the Swedish and Scandinavian market. and find the same type of customer. People who want exposure to Bitcoin, they don't know it yet, but they want it because they want higher interest rate, for example, or higher yield of some sort, and produce those products. So in our case, we can't do the exact copy of a Strife or Stride or Stride. The Stretch, for example, is administratively complex because it's a monthly payout and so forth. But all of those things is what we should do. That's where the actual speculative attack, the primary value of the speculative attack comes from, I think, because the convertible is super good. Fiat convertible is fantastic. Bitcoin convertible is fantastic. ATM is important to generate, more and more Bitcoins over time, not only premium. But what the really creative and the companies that will stand out and survive in the long run is the ones, I think, that produce actual value for the fiat community by using Bitcoin for them and producing products for them that they want to buy. So my goal is just to do that. We want to be the most creative Bitcoin company out there, focused on the Scandinavian market. And I think that's a really good thing to focus on, because I think that's where the actual yield will come from, especially when the premium is not super high for an extended period of time, let's say bear market or so forth.
Yeah, no, that sounds great. I see it very similarly as well. I think in all markets, I think the Scandinavian market especially, interest rates have been very low through all of Europe, also northern Europe especially. And so I think a lot of these funds that need to invest and generate fiat yield, they might be quite attracted by a 5%, maybe even 4, 5, 6%. And if there's that additional sweetener on a convert or something else like that, then I think it'll be no shortage of capital that would be interested in such products. So I think that's very exciting to see. Maybe just because we're to wind up here, because we only have a few minutes left. I'd be kind of curious to hear just on the practical side of getting the company set up. I mean, you mentioned it was it took about 3 months to get listed. Was that a particularly onerous endeavor? Did it take a lot of work? What kind of capabilities did you and was it just yourself, or did you have a team behind you as well to support?
We are a team of 4 people, and we used some different, a lot of things you can do yourself. Sweden is a really good country to list a company. It's a very good process, and I have experience with it before, so we have knowledge on how to do it. But when it comes to, for example, how do you structure the correct articles of association, because this is a very new type of company. It's a Bitcoin Treasury company. How do you structure that? You shouldn't just do something. In our case, we went to what we think is one of the best law firms here in Sweden to set up that type of document for us, and we just used them. And then the same for, okay, who should do the bookkeeping? It should be an external party, because then you get a new set of eyes into everything you're doing. Who should do the auditing? Well, you should choose the most Bitcoin, with the auditor with the most Bitcoin knowledge, which we have chosen here in Sweden. So I've tried to use as much external knowledge as I can, compartmentalized where it's needed. But when it comes to just Bitcoin operations, like for example, how do you set up a secure storage setup? I have extended knowledge of that specific field, and I'm very paranoid as a person when it comes to Bitcoin. Like for example, of course, I have no access to our Bitcoins. I'm the CEO of the company. I have no access to the bank accounts. I have no access to nothing, because that would be an idiotic way to structure a Bitcoin treasury company.
Yeah, like a single point of failure, then people can come after you.
Yeah, exactly. It's just not a good setup. So I have no access to anything. And that's really important. So when it comes to that type of thing, or how do you convert fiat to Bitcoin in a good way, like low spreads and so forth, that I have really good knowledge of as well. There I just took my own knowledge, and I've been the designer of that logic. But when it comes to, for example, structuring a convertible or something like this, there usually we use an external firm, because it's good to use someone that has more knowledge of TradFi than when it comes to raising funds in that market, for example. So I think we separated it like that, and Sweden is a good market to do this. We did most of the work ourselves, I would say, and that went completely fine. But we're quite, it's not work when it's all you want to do, like It's not because if I was working for I was middle management at some firm, and they requested that I would do some documents because we're getting listed. Awful, like I don't give a shit. But this is not that. This is a tool to do a speculative attack on Bitcoin. I can't imagine anything more interesting or more important. It's just, it has to be done. So it's not work. It doesn't take time. It's just being in your zone. That's what this is, and it's amazing.
Love it. Very, very cool. One last question. I realize it's 12 o'clock now, but I'd like to just ask one more question. And I think we'd have to have a follow-up conversation at some point because there's so much more stuff I'd love to discuss. But the last question, do you have an indication now, I guess, like in the types of investors you currently have? Of course, you had that initial private placement. You've since done some more equity issuances. Do you get a sense, is it primarily retail, primarily institutions? If so, what kind of institutions? Anything you're able to disclose? I don't know if maybe some of this is confidential and not able to disclose, but anything you are could be quite insightful.
But we have had discussions with most types of retail and institutions, and what I've found is the same as you find when it comes to Bitcoin religiousness, that it seems to strike, like Bitcoin strikes throughout the whole spectrum of humanity. It doesn't matter your age or your background or your knowledge, or it doesn't seem to, it's like a virus that just attacks certain individuals, like a brain virus that it's very random in that sense. It comes, it's not dependent on nation or person or anything. And I find the same here, like fiat people, fiat institutions that are interested in this generally is either completely against it or interested. And therefore we have gotten, I've gotten a lot of inbound requests from both private individuals and institutions that are interested in setting something up. So therefore, I think it's both, and it seems to be, it's almost like we unlocked institutions as a potential investor now, and therefore the dice is being rolled on if an institution is either Bitcoin friendly or not. And I can't really judge what is needed for them to become interested, but it seems like it's almost random. Some are, some are not, but now we have institutions and they are coming, and therefore I think we will see more and more of them slowly, but private individuals have always been interested in Bitcoin, and that's why primarily I think that's where you see, if you look at, for example, treasury companies convertibles, who is actually putting in fiat there is generally private individuals at the moment, but we will see more and more institutions popping up. And when it comes to more complex things like an ATM structure or something like this, there you have an institution that is doing something because that's more market making-esque, and they've done that before, and it's not really exposure to Bitcoin, it's more arbitrage between, So there you see institutions because it's more complex. But I think we will see more and more institutions jumping on the convertible and the Bitcoin convertible and preferred shares and so forth.
Awesome. And is it safe to say that these are Swedish or Scandinavian institutions that are being
No,
attracted?
I mean, people seem to, it seems more like an institution suddenly becomes infected by the Bitcoin virus. And when they do, they spam all treasury companies.
Okay. Yeah.
Because it doesn't seem to be located geographically. They seem to just want exposure to the concept, and they don't really care about the geographical, to some extent maybe, but Sweden is a very high trust society. So we get inbound from everywhere, I would say.
Fascinating. Awesome. Okay, Christoffer, thanks again for such an amazing conversation. Really enjoyed all of it. Really excited to talk to you again sometime in a few months from now and see how BTCAB has been developing in the intermittent time. I look forward to kind of following from the sidelines, and I wish you all the best.
Yeah, same. Thanks a lot.